let's get
What's up,
going.
YouTube? I'm tapping in. Another day is in the books. If you made money today, let me know down in the comments below. Listen, as always, I got a jam-packed video for you guys, so please keep it locked. Please make sure you like, subscribe. Help this video get at least 1,000 likes. Without further ado, let's go ahead and dive into it. Now, listen, we have some major happenings taking place, okay? This level of volatility that you guys are seeing, all right, they create excellent buying and money making opportunities. So I don't want you to miss these opportunities, okay? Really quickly, I'm gonna pop up here 3 green soldiers as something I want you to look out for. You guys are going to get one more pullback. If it don't happen soon, I want you to know what's coming before we take off. Do me a favor, please buy the dip, okay? Don't get left at the train station. Don't let the early morning sell-offs fool you or trick you out of your position. Listen to this, guys. Speaking of early morning sell-offs, all right? When you are in the seasonal period that we're in, okay? I told you guys, typically August and September, the market was supposed to go down, okay? But because it didn't, they're choosing November to try to push it down, but they don't have enough strength to keep it down. So it's going down. Everybody write this down. The market is going down the first half of the day. Okay, that's not for you to freak out. Okay, if you know how to buy puts, cool. But even if you don't, just fall back and wait on the bottom to get hit, or support, we call the bottom, okay? And then boom, we're gonna see stocks make the move back to the upside, all right? Because buyers are beating the sellers. You got bears and bulls, you got buyers and sellers. Buyers is what make the stock go up. Sellers is what make the stock go down, okay? And so I want you to know these concepts so that you can know what's going on. So like in the beginning of the day, when the stocks are going down, you should just simply say, okay, the sellers are in control. And they might be in control for an hour and a half, 2 hours, and then you need to say, okay, boom,
Okay.
the buyers are stepping in. See, I'm an athlete, guys, so I treat the stock market like a high level football game, an NFL game, if you will. You got the first quarter, second quarter, halftime, third quarter, fourth quarter. So the first quarter, like for instance today, Tesla went down. Let's just use this example. The SPY.
Okay. Let's think about stocks in terms of days. Analogies are cool, but days are more sustainable. Okay. lithium-ion batteries, guys. That's what we're looking at here. CISO Environmental provides air and water quality treatment. Helps protect people, the environment, and industrial equipment. Okay. Okay. QuantumScape has how much revenue? First ever customer billings. Okay. All right. I can see comments on YouTube. Questions? Otherwise, we'll get going here. This one stock can change early buyers' lives. I'm not a financial advisor, but some financial advisors might say, given the research that I've done and show in this video, that it's a good idea to buy as much as possible of this stock before December 1st. The ticker is QS, QuantumScape. It's a solid-state lithium-ion battery company. And they just had their first customer billings of $10 million in Q3. Now, that might not sound like a lot, but they do have $1 billion of liquidity, giving them a strong runway into 2026, 2027, and at current cash burn into 2030. They do have a partnership with Volkswagen, and the battery sector is starting to turn up after we've had a slight sell-off in the SPY. There is one other stock I want to make everyone aware of. If you're more cautious, this stock has $1 billion of revenue guidance for 2026. So it's much bigger. The ticker is CECO, CISO Environmental. They do air and water quality. It's an industrial stock. And if you're new to this channel, we've had some pretty incredible results this year. So I just want to take a second to highlight those. The solar company went up 37% in a little over a month after it was mentioned on this channel. This energy company went up 200% in just 2 months after it was mentioned on this channel. Semiconductor stock up 100% in 45 days after we mentioned it here. This battery stock up 90% after we mentioned it here in just 1 month. So those have led to some pretty impressive results in the Discord. Here's one member who made $10,000, and this member made $6,500. So I'm not here to say that those results will be yours. I don't guarantee any results, whether you join or just watch these videos. But we do have a $19 Cyber Monday deal. You can take advantage of that 7-day trial at stockscommunity.com. It's the first link in the description. This is not financial advice, but let's jump into a breakdown on QS.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So here's the chart first off, and I do want to pay some close attention to the chart here because we're at a time where if we look at the SPY, 4 big green days in a row up, Bitcoin having a slight bounce, gold up recently, a little down day today, but mostly up. And sure, the dollar's slightly down, the 10-year bond is slightly down, and this is all not unexpected. Small caps are up. The tech stocks are going up with the market, of course. And the healthcare stocks are still up, but there's starting to be a little more of a rotation into big tech stocks and little tech stocks like QuantumScape, where speculation money is starting to flow back in. I'm not saying it's a good idea to start buying quantum stocks like some of these, or rare earth stocks like some of these. They've sold off significantly. So while you might get a little bounce, it's not super likely. There's a lot of other sectors that might be interesting. If you look at, well, some stocks you can just tell by the look of the candles that it's a little bit choppy and a little bit slow moving. So that might not be for you. Others look like they're setting up, and you can tell that from the sector, you might not want to own them. This is a biotech stock when you look up the ticker TVTX. So that could result possibly in a drop like QURE or NTLA. So you have to be a little bit careful to look into the ticker once you get a read on it. But in general, QS, just based on the chart alone, looks like it's turning up slightly, leveling off. And once it can get above this level of 1250, where it held back in September, the end of September notably was the end of a really big run in the market. QS just kept marching on. There could be a move up here to those 14s, 15s. So that is the report for QS. Of course, if it doesn't go up, these days are so tight that you can just sell out for a small loss, which is how this idea is more responsible than others you might see. So this is that cash in the bank, $1 billion in liquidity. And they're in auto parts, they're in batteries specifically. They're in California. So it's a relatively trustworthy place to have a battery startup. They are a startup. They are definitely riding on the coattails of Volkswagen a little bit. They do solid-state lithium-ion batteries for electric vehicles, potentially usable in broader energy storage context. And what that means, one application is energy storage. So Bill Gates is an investor. I didn't realize that. But generally, investors are listed here in the filings, the ownership. But sometimes the amount that someone invests might not bring them into news stories, or they might be investing through a fund, which is why that might not have shown up. But the Volkswagen agreement is really the main point of interest. It's a big partner. So for a company that only has 10 million of revenue, having a big partner, it's basically the equivalent of a biotech having a partnership with Novo Nordisk or Pfizer or Merck. So they're out of Stanford. This is this investment from that partner that was about 7 years ago now, but they've put in hundreds of millions of dollars. And this did come out of a special purpose acquisition company, a SPAC. Of course, 2020 was a bit of a SPAC graveyard. There were a lot of companies that got those shares redeemed for $10 a share, and some that survived, and QuantumScape has survived. So we'll see how they continue on. Obviously, 2020 was a very euphoric time, so them surpassing the value of Ford was short-lived. And, you know, this was an easy time to be a short seller or a short report writer in 2021. Since then, they've just been working on the product quietly. 15 minutes is very fast. And this is the fruits of that partnership. This battery prototype, which has a very low capacity loss. And this is the real meat of the partnership, is high volume production. So we'll see if that comes to fruition. That was from last year. But it seems like this company is legitimate. They have all the markings of a legitimate company. Stanford, now Bill Gates, which I just noticed, Volkswagen, and the literal chart, which shows that, sure, they've had some sell-offs, but they definitely caught fire in a good way recently. Notably, this other battery storage company did have a little fire, but they're saying it wasn't involving their batteries, and their stock seems to be doing fine. So that's good for the sector. Solid Power is another stock in the sector that sold off just like QuantumScape and is sort of leveling off here. So I anticipate, I could be wrong. I'm actually wrong quite a lot, but when I'm wrong, I try to not be wrong by a very big dollar amount or percent amount. And so there's stocks like Wolf, which I did mention a few days ago, which are leveling off, and it did form a higher low and then had a big move up. Cipher and Iron could do, well, Cipher already did that. Iron, I think, is still working on it. These are the Bitcoin miner turned AI data center compute providers, which could turn up in the near future. But right now, the focus is on QuantumScape. Could it build a higher low and then, you know, really go after that? Could it just have a move up directly? We'll see, but it's definitely in the conversation of traders, which is what you want, because this is a $10, $15, $12 stock. It's not on the eyes of huge funds, even though there's plenty of liquidity for any individual, any high net worth family office. You know, there's $100 million a day. So it's easy to put a few million in, barely move the stock at all, and look for a move of, you know, 10% or something on that, which a couple $100,000 or less or more is no joke. So that's the idea. I understand not everyone likes these $10 stocks. So for that reason, there is another stock that looks interesting, and it's CECO Environmental. It is a $2 billion stock. Of course, the market caps are not that different. I mean, QuantumScape's market cap is actually $7 million. But notably, CECO has this revenue guidance of about $1 billion for next year. So there's that outlook. Revenue projected at $850-950 million for 2026. And here's the stock right now. It clearly had a solid Q2 earnings. The reaction was excellent. And yes, that coincided with the market going up in September. But since the chop has happened, the price of the stock hasn't really come down, which is a super strong indicator that it could keep going up as the market turns up. They did have this earnings reaction, which was a little wonky here in late October, which we see right here. But it bounced right back. And why it's on watch right now is look at this. Look at this strength over the past 4 days, along with this sell day, which created this nice flag. So if you look at a company like Wolf, you can't really buy this right now. Right? It just went up 30%, had 4 green days in a row. So it's probably going to have a day like this at some point, or even a smaller day, just an inside day or a sideways, a little red day. So it's rather makes more sense to just let that happen. So rather than get caught in it, I think it makes more sense to look at a company like CECO. And entries really matter, whether you get in here at $52 or if it sells off and you get in at $50. That couple dollars, let's say you put in, you have a $500,000 portfolio, you put 10%, $50,000 in there. That is the difference of 2%, which is $1,000 right there just in getting your entry right. So I think it does matter. I think the liquidity is definitely good enough. And to say exactly what it is, it's 100,000 times $50 means 5 million, means $100,000, $200,000. You're barely going to move the stock at all. Obviously the spread is all messed up right now, the bid and ask, because it's after hours as I'm recording this, but I don't think you're going to have any trouble with a couple $100,000 position in this stock. So it's a nice alternative to QuantumScape. It did have solid revenues. 200 million is a 50% almost year-over-year increase. And they have this backlog, which is also a 60% year-over-year increase. So they do, it's a little bit of a niche sector, pollution and treatment controls. So there's not a lot of companies that get talked about on, whatever it is, CNBC, MSNBC, that they all want to talk about the AI companies, right? They don't want to talk about any sort of emissions management or energy efficiency or ESG. ESG is almost slightly in the, not so cool category of stocks to talk about right now. Maybe just given the current administration. But this company does a lot of different things. I mean, industrial air, water, battery production, recycling is definitely in that green segment. Dallas is, Texas is sort of, do whatever you want, but still, a lot of these companies need a company like CECO. We can look into exactly what they do because it doesn't really make a ton of sense that companies would just hire them as a consultant, but they're making a lot of money, $200 million a quarter. And this is what they've been up to. They spun off part of their business, $100 million for that. And they also, it sounds like they sell actual products. So it's not like they're a consultant verifying other companies' ESG or carbon credits or anything like that. That makes more sense. I think they're literally helping companies save money by choosing more environmentally friendly products that actually make up their industrial centers. So pumps literally for their factories or warehouses. So we'll see if this company is in it for the long term. I'm not really worried about that. It's more about how it's setting up right now. And we can look at these peers in just a second to get a better grasp on what they're doing. But I can tell you, there are a lot of investors who sadly or sort of savantly don't look at what a stock does. Okay, they just look at this buying and this breakout and this earnings reaction, and they see a stock that went from 20 to 40 in a handful of months and is setting up. But now again, there's definitely buying that's trailing off a little bit. So price is going up while the volume is trailing off, which means, sure, there might not be a ton of buying, but more importantly, there's not a lot of people selling. So these big candles are big, but remember, this was also, November 12th, November 13th. It's been choppy in the market, and CECO is holding up impressively despite a time when a lot of big stocks in the market. Just remember what AMD looks like. I don't have to tell anyone who's been looking at the market, but this stock is down 20% just in the last couple weeks, 3 weeks. So not the case for this company. Serious relative strength to the market, and it looks like it's setting up well. And one last note just on their peers, pollution treatment control, industrial pollution, combustion emissions, and filtration, pollution control, industrial services, water treatment. So these seem like basically utilities companies. So the easiest way to look at these rather than individually, and in the sake of name of time, is industrial. So XLU is a way to look at it. Utilities. And you can see that sort of turning up nicely. So that's the stock. Those are the stocks. QuantumScape and CECO Environmental. If you like these ideas, hit that like button. Helps the YouTube algorithm, which is just people, find this video. If you want a free course on how to buy stocks before they go up, hit that subscribe, and that'll be posted in the YouTube post once a month for subscribers. If you want to take advantage of that $19 Cyber Monday trial, and you could get results like the testimonials that I showed earlier in the video, head over to stockscommunity.com. You'll see those testimonials in full, and you can try that out for 7 days. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay, folks. Almost forgot to put Chris Sane back on.
Went down in the first quarter. Okay, you guys like basketball? You got the first quarter, the second quarter. Okay, then you got halftime. You got the third quarter. But then after the stock went down, say for the first quarter, say the first quarter was till 10:30. Okay, so then the second quarter start at 10:30. Then the stock is going up at 10:30 till halftime. Then at halftime, it takes a break. That's what you do. You go to the locker room, you get your instructions, the coaches get after you, kind of let you know what the game plan gonna be for the second half. The second half kicks off the third quarter. You might come out in the third quarter and go up, down, up, down. We call that consolidation, okay? And then the fourth quarter, they make
It's actually
direction,
XLI, right?
So I want you to think
Industrials.
of the stock market in
I said
terms
XLU.
of quarters, so that you not thinking that just because it's down in the morning that it's down all day. No, it can be down in the morning and then finish the day at new all-time highs. And that is something that can consistently happen in the market. That is something I need you guys to be aware of, okay? With that being said, check this out. The government is dangling out there the new Fed pick. Pay attention to these types of things because they will have significant bearings on what happens in the market. So as we try to get, or they try to get Fed Chair Powell up out of there, as they try to get Fed Powell out of there, they're going to try to replace him with somebody that we call a flunky in the neighborhood. If you guys are from the trenches, you know you got flunkies, you got runners, you got all kind of people like that, okay? This new person will be somebody that Donald Trump can be a puppet master.
I get the idea though, yeah.
Have him do what he wants them to do. Cut rates, give stimulus checks, do this.
Okay, so 1.7 billion, slightly ahead of guidance, for SanDisk. And then for Sienna, 1.2 billion, up roughly 30% year over year. SanDisk doing memory, Sienna doing routing, networking. $1.7 billion beat guidance and 1.2 billion up 30% year over year. Okay. So they're both big companies. They're both about the same. Okay, so let's jump into a little breakdown here. Okay. Happy holidays, SC. SanDisk is indirectly connected to data centers. So any company that uses these data centers would be connected. That's good enough for me. Okay. Cyan is Sienna. You're welcome. Buy every share of this stock that you can. This is not financial advice. I'm not a financial advisor, but based on the research I'm going to show in this video, some financial advisors might say to buy as much as possible before December 1st. The company is SanDisk, ticker symbol SNDK. They provide enterprise-grade memory, so solid-state drives like you'd have in your laptop. You probably heard of SanDisk. It's in the same section in Best Buy as Western Digital or Seagate. Micron is in the conversation as well as a publicly traded ticker in memory. SanDisk notably is up for S&P inclusion on Friday. And if we've looked at prior S&P inclusions, Tesla being one, Robinhood being one, there can be a slight gap into that event. Palantir, most recently. Now, that could sell off after that event, but this company still has 1.7 billion in revenue, which is above the guidance expected. And the memory segment as a whole is a growing market. These data centers have a need for memory. They're basically like massive computers, stacks and stacks of servers. And so SanDisk is not directly a client per se of Google, of Amazon, of OpenAI, but this growth and sales is driven by these data center buildouts. So it's all connected, and there is a company as well I want to share with you, Ciena, ticker symbol CIEN, that I'll cover in this video, that does the optical connections, the networking for data centers, that is also implicated in the growth of this massive circular financing AI bubble boom that so many companies are benefiting from. CN has 1.2 billion in revenue. It's up 30% year over year in revenue. And it seems like they do have a connection to Google Cloud, Amazon Web Services, in that they are presenting, connecting the literal GPUs that allow all of this computation to occur. So with that in mind, this is not financial advice, but I do want to show you some of our results, especially if you're new to this channel and if you're unsure about what we've got going on here. So this is one idea. We've had solar stock, FSLR, up 30%, 35 plus actually, since we mentioned it. Bloom Energy, a power generation stock, up 200% since it was mentioned on this channel. A-Lab, a semiconductor stock, up 100% since it was mentioned here. A battery stock, up 90% since it was mentioned here. And we've had a lot of pretty big wins. This is one of our members in the Discord. He made 10 grand, which is pretty awesome. And then another member made 6,500. So we are running that $19 Cyber Monday deal for 7 days. You can try that out at stockscommunity.com. See it's for you to get a little help one-on-one, or just see some recordings of technical descriptions that I could put on this YouTube video and in this channel. But in general, people, I think, want bigger ideas on here. So give it a try. And this is not financial advice, but let's jump into a breakdown.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay, so here's what we've got going on here for SanDisk. This is the revenue. First off, they're up a lot, okay? They have gone up a lot. All these memory companies have gone up significantly. But SanDisk seems to be pretty much ready for a bounce. And here's their earnings, okay? 1.7 billion. It's actually down a little bit, but ahead of the guidance, which is what matters, because the market, of course, is pricing in what people expect, and then what happens changes the price. So that's what's going on. Of course, if I knew everything that was going on, this would be a lot easier. They did have a net loss, so that's sort of a one-time thing, it seems like. Nothing to worry about. And this is the number that's pretty important, cloud, which is that growing segment of data centers. So if we just simply look at the chart, I mean, a lot of these numbers are down a little bit, gross margin down a little bit, but the chart doesn't really lie. So this run is insane. Almost 400% or whatever you want to call it, depending on where you measure it. And sure, it's had a little bit of a sell-off recently, but that's to be expected. And this stock absolutely skyrocketed. It does have S&P inclusion on Friday, so the market's closed tomorrow, which is Thanksgiving in the US. and Friday's a half day. So there could be a little move. Notable levels. This was a little sell-off today, a little small day. Really brings it back to this nice 215, which, you know, if you're going to put, say, 10% of your 500K portfolio or whatever 10% of what you've got going on is, there's plenty of liquidity. This is 30 million shares a day of a multi-$100 stock. But you just want to make sure, you know, if you're buying, gosh, I don't know, even, let's say, 500 shares of this stock, if you are risking $1, you know, versus $5, that's a difference of, you know, $2,000. So it really matters. And if we look at the intradaily, which is helpful for a stock like this, it is presenting a sort of risk level at 211, which is pretty clear. And it sort of goes all the way back to here and here. So you don't have to be that particular. You can say, hey, you know, this has gone up a lot. It's pulling back. I'm looking for a bounce up. I'll risk here. I'll let it maybe fall a couple of days. That's fine. But it's not optimal. If you really want great results, it's recommended to risk as little as possible. Because when this stock trends, it really does trend. I mean, this is no joke. This is 30% in 3-4 days, right? So this stock can really, really move. And if we look at other stocks in this sector, Western Digital, I mentioned, they've already gone up 4 days in a row with the market that's gone up 4 days in a row. The QQQ has gone up 4 days in a row. So you can't really buy these. Seagate as well, Micron as well. So it's really only SanDisk that presented this nice opportunity, partially because there was so much buying on, I guess this was Tuesday or Monday. Yeah, Monday was the 24th. Got a little confused because I have Sunday futures on this chart, which I don't really need to have, but it's nice to have as much information as possible in an easy to display manner. It gapped up a lot, okay? If Monday was a monster day. Monday can be a moon day. People are excited to buy after the weekend, but I think that's because it went down so much. So for whatever reason, we could pick this apart for a while, but all we really have to say is it's kind of a gift that it gave back a little bit now, because now you're not buying it 4 days up in a row, you're buying it after a give back off of this key level. So that's the idea. That's SanDisk on a chart. And a little more about what they're up to. Well, we'll see. Again, this goodwill impairment, I don't think is a big deal, or if it is, it's a one-time thing. It's not like they had some crazy fire or scandal or anything like that that would make them less liked by the market. And sure, I mean, there was some declines in revenue, but it's pretty clear that just from the 400% growth that there's a lot of demand for memory. They spun out of Western Digital. I don't think it was that recently, but yeah, the demand depends heavily on data center and consumer macroeconomics, sure, but data center, no one's doubting that. No one is saying that these memory companies are going to go, 500% more just because it looks like they spun off just this year, actually. So they're going up because Sam Altman keeps talking about needing 20 gigawatts of power, which is for whatever the number is. Someone can tell me in the comments, 20 gigawatt hours of compute. Whatever it is, it's in the hundreds of billions just to be able to pay for all of this. And that hundreds of billions is going to companies like SanDisk and like Sienna. So this is that S&P 500 inclusion. It's a big deal, and it's not make or break, how it behaves on Friday, but it's a nice little boost. So we'll see what happens. There's definitely memory chip demand right now. And as long as the AI data center wave continues, this stock's definitely interesting. Sure, there's no connections directly to Google, Amazon Web Services, but we all can make the pretty clear connection that these are the clients of the data centers, and the data center is the client of SanDisk. So that's what's going on. Okay, so that's probably enough of SanDisk. I mean, we're not trying to be total fundamental investors here. Otherwise, we just get stuck in a company like this when we want to look at a number of companies and look for the best opportunities. In my opinion, I'm sure they have some pretty exciting products. High capacity solid state drives are actually, really exciting when you get a laptop with one of those. I've experienced that. But here's the deal. Here's this other company, Sienna, that I think is a nice pairing to SanDisk. So anything can happen, but Sienna definitely has enough money coming in to 1.2 billion, up 30% year over year, that it's interesting. It's of a similar size, 12 billion market cap. High institutional ownership, although that doesn't matter quite as much as it might in biotechs or healthcare. But look at the chart. I mean, if I took the tickers off of this, could you tell me this was Sienna and not SanDisk? I mean, they seem to be moving pretty similarly, right? So I'm not saying they're going to move the same forever, but this went up 70%. So the scale is definitely different in terms of growth. SanDisk going up 400%, but there's definitely some correlation here. And yeah, it is up 5 days in a row. So I'm not saying to just hop in here willy-nilly, but these candles are pretty big in SPY. And if we look again at Western Digital, these two candles are big, I guess it's kind of like buying Western Digital. The reason it caught my eye is this shelf is really interesting. So maybe you can find something like that for these other companies, but this is pretty pronounced. 1, 2, 3, 4, 5. And tight days are really good indicators of price agreement. So buyers don't want to pay more for it. Sellers don't think, don't want to sell it. They think it's worth it at that price. So if you can risk whatever it is, 190, and sure, it'd be great if this came down a little actually to risk off that level, but that would be a really good buying opportunity. You see it hit here again, to buy Sienna. And there's plenty of time before this earnings as well to take a swing at it. So that's the chart, which is pretty important, even though it might seem sort of, astrology or loosey-goosey or just uninspired or non-intellectual. But this is what they're up to. Network hardware, switches. We all know that all these optical companies are doing well. They do have a pretty significant margin too. I don't know about non-GAAP and then gross. That's a lot of qualifiers, but they are expected to grow revenue, and they're working on data center interconnects, AI-driven networking, pretty much exclusively, winding down their prior businesses. So they're definitely in the right category, hyperscalers. And we're not betting on this company like you'd bet on OpenAI to be the savior of this sector. I mean, are a lot of companies that do optics, fiber optics for data centers, and we can look at some of those. But we do know that this company is positioning itself to benefit from the hyperscaler build out, from the AI build out, and I see no reason that they won't get big contracts or continue to get big contracts. So they have this acquisition of a company that helps them compete in that space, So all the signs really show that they're in the same conversation as Lumen, which is actually a collaborator. Or these are smaller companies, but Lumen in particular has had some pretty significant growth. If we just look at the chart for Lumen, I just want to make sure we do see that, yes, AWS is likely the end client for this networking solution. Azure, likely, maybe not in the US, but Google Cloud and IBM are literally listed among, Sirion, which is Ciena's, I guess, I don't know what, if Sirion's their operator, then Ciena would be the provider for Sirion. That would be the correct terminology. You get what's going on here. We don't have to pretend to business speak it. Lumen had a pretty awesome run. Did sell off after earnings, but starting to turn up. It's not as much of a slam dunk, I think, as a company that just has been going up like crazy. Lumentum, Light, also sort of connected. Big break through 300, but kind of gone. And then these other companies, AAOI has just been really choppy. And Coherent, COHR actually, is also one that's in the conversation. So those are ones to keep an eye on. But I think Ciena is the best idea right now. So hope that helps. I will say that we're going to see. We're going to see what happens. And you don't want to hold this into earnings. But definitely very interesting companies, SanDisk and Ciena. So if you like those ideas, hit that like button for the YouTube algorithm. Help people find this. If you want a free course on how to buy stocks before they go up, hit that subscribe. That'll be posted in the YouTube posts once a month for subscribers. And if you want results like the testimonials I showed, I can't guarantee it. Can't guarantee this information will help you at all, but there is a $19 Cyber Monday deal you can try out, see for yourself. It's 7 days. You can head over to stockscommunity.com and give that a shot. And I'll see you in the next one.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Thumbs up. See what else Chris Sane has got for us in the motivation department.
Let's do that. All stuff that's not going to be good, but the market might like it, okay? It might not be good long term, but the market might like it short term, okay? And so just know, pay attention to who the pick for the new or next Fed chair will be, because that will have huge implications on who they go with, but also how the market views them. Okay, if the market views them favorably, you're going to see stocks go up. They're always looking for a catalyst. Okay, if the market doesn't view that person favorably, boom, the stocks will go down. And so these little things, although they shouldn't matter, they do matter, and you need to have them as part of your whole entire plan on your journey. Okay, so with that being said, guys, do me a favor. You need to be buying a dip. I'm going to throw out 3 stocks that should be on your radar. Okay.
Ooh.
Now, if you on a money team,
Securities.
you already familiar with Google. All right, but
Google's already
they
up,
are
though.
going absolutely crazy. Okay, but another one you need to be aware of is Apple. Okay,
Apple's a good one, I
and
think, right now.
I told you 3, but I'm
Hasn't
gonna put 2
broken
more
out
on
yet.
your radar. Okay, you still need to be getting Nvidia. Okay, if you have
Nvidia, I don't know
not
about
bought
that right now.
Nvidia on this dip,
It's some
please
sideways.
do so. Okay, you need to understand what's coming down the pipe for 2026, or going into the end of the year, into the new year. You don't want to be left at the train station because you're not in proper position. Okay, so do me those favor, at least in terms of blue chip, high quality, have some of those on your radar. Okay, and another one that's getting slept on, but when it wake up, is going to change lives. Is
What's
Meta,
it gonna be?
okay? Now I already told
Meta, yeah. I don't know about buying that right now. It's a risk. You could buy some options on it. I'm not going to suggest that. I can't believe I just said that. Okay, let's jump into a little breakdown on knee and GLW. So, fiber optics. It's all about data centers, right? That's the name of the game. Okay. Let's get some numbers of money here. Operating revenue rose 5% to $8 billion. And Corning has sales of $4 billion, up 15% year over year. GLW and NEE. And Next Era, notably, they own Florida Power and Light, the largest regulated electric utility. The largest generator of renewable energy from the wind and sun. World leader in battery storage. Incredible. Largest generator of renewable energy from the wind and sun. That's pretty crazy. Glassworks AI. And I think they got what? Okay. Optical communications, $1.5 billion, up 30% year over year. Renewable energy storage added 3 gigawatts. Okay. $1.5 billion, up 30% year over year. There is one stock that is about to skyrocket. The company is the world's largest renewable energy generator of wind and sun in the world. They just added 3 gigawatts of renewables, which is the largest quarterly addition of renewable capacity that they've ever added. The company is Next Era Energy, ticker symbol NEE. They own Florida Power and Light, which is the largest regulated retail electricity provider. And they are set to be a large provider of renewable energy and also battery storage, which is part of their offerings for data centers. So data centers require a ton of compute and they're always on. So all these different power generation sources have to mix and be, no pun intended, regulated to balance the load at all times to make sure that the amount of power going in is the amount of power that's getting used, which is called power balancing, and that always has to be the same. There's another company that's also looking very enticing. The ticker is GLW, Corning. They have a product called Glassworks AI. It's an optical fiber. They have a segment, optical communications, that actually grew 30%. And the number is big, $1.5 billion of revenue. So it's a large segment. It's a very important segment to have growing because it serves the data center vertical. So both of these companies are implicated in data centers, and that trickle down hundreds of billions of dollars that's getting poured into OpenAI, that's getting poured into Meta so they can buy AI researchers or spend the money on compute, is finally reaching the actual build-outs of the data centers, the communications providers like Corning, and the energy providers like NextEra. This is not financial advice, but those seem like pretty clear recipients, and the money is already flowing. If you're new to this channel, here's what we do. We don't just come up with ideas based on fundamentals. We've actually had some pretty big gains. So this is a solar company, a renewable company, FSLR, that went up 40% nearly in a month and a half after it was mentioned here. Bloom Energy, they actually provide energy to data centers on sort of a very fast basis, mobile basis, 200% since it was called out here. A-Lab, a semiconductor company, up over 100% in a month and a half. This battery company, AMPX, up 90% in 30 days. And unsurprisingly, we've had some big results from these ideas. So one of our Discord members made 10 grand, and another made 6,500. So pretty good results, especially considering right now we're offering a $19 Cyber Monday deal where you can try that out for 7 days. So if you think that's worth it, give it a shot. I'm not a financial advisor. It's not financial advice, but I hope these ideas help.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So here's what's going on for NextEra. Q3 earnings were solid. They beat consensus, and the earnings per share was up. Revenue was up 5%, 8 billion. Didn't quite meet estimates, but this was the important bit. 3 gigawatts, 2 gigawatts of that in battery storage. So you do need a lot of battery storage, not just wind and solar, because if you can't store the energy in batteries, then you effectively are just wasting wind if it's really windy at night and there's not as much usage between 1 a.m. and 4 a.m. At all these data centers. So this is one of the largest quarterly additions in storage backlog for NEER, New Era Energy. And here's the company. I keep calling them New Era. They're NextEra. Big company, 100 billion plus market cap. And along with their affiliates, they're the world's largest generator of renewable energy from the wind and sun. And then we also talked about that battery storage addition. 2 gigawatts of battery storage is a lot to add. And they're not just in Florida, although this Florida utility is the largest electric utility in the US as far as how much electricity it provides. These 5 million customers, 10 million people, sounds like 5 million households. But they're in New Hampshire, they're in Wisconsin, and they do have their hands in nuclear as well. So they're likely to be a bit of a test case as we transition from a no nukes environment for decades to one where it's a little more friendly towards any type of power generation source that is clean, but also spins up quickly. So natural gas will, of course, be part of that. But solar, wind, and then nuclear is going to be part of that as well. So that's a little bit about the company. And then reaffirmed guidance as well. So if we look at the actual chart, we can see some of this playing out. This spike, of course, was a little bit crazy, considering this is when earnings were. Midnight is a little bit unusual earnings result time, okay? But some companies do. Usually it's in the after hours, like 4 or 5 p.m. or, in the morning at like 8 a.m., 9 a.m. But there was definitely some buying up to that and then sell the news, okay, when that came out. So we don't have to look too much into this, even though it looks crazy on the chart. We can actually sometimes, this is something that you can do. I'm not saying to do this with every bar, but it gives you a better picture of what's actually going on here. And when you just take out that weird move, you do start to see something shaping up pretty well. I'll put it back because I'm not going to totally, pretend that it's not there. But that's what's so interesting. And the energy ETF has sold off a little bit. Crude oil has sold off a little bit. But a lot of these other energy companies, I mean, the big ones just follow crude oil. So you can't really get excited. And they also move so slowly. So there's a reason NextEra is much more interesting. And again, I'll put those back because it's only accurate, but I don't want to oversell the importance of that single spike. So there's definitely a level that's interesting at 85 and maybe just over a previous day's high of 85 exactly. It's at 85 and change right now. Here's what I'll do. That's actually shows it a little bit more accurately on a daily chart. It's not as scary. It almost reached that level up here. So once it gets above here, it could really fly. This is a pretty significant higher low. So this is something that someone looking at this chart, and these people exist and they do extremely well. Talking returns of more than 50% a year consistently for years. There's not a lot of them, but there's definitely thousands of them. Once you get into the 10 years or more, you get down into the hundreds. But still, you can just look at a chart if you're one of these people and you can say this is interesting. Now, it's also nice, in my opinion, to take a look at what's going on. So you look at the right charts. I think most people would agree. So weather is one factor that isn't talked about a lot with utilities, but it definitely matters. There are companies like Generac, the generator company, famously does really well cyclically during hurricane season. The stock goes up. People buy it because people are buying more generators. But that's sort of a minor little side note. NextEra is more about the long-term, the battery storage play. Didn't even talk about electric cars, but that's going to add another piece where they're charging and they're going to overload transformers, and having that battery storage to store that energy is crucial. Otherwise, you can't have everyone have an electric car, even most people. I'm sure in some neighborhoods you've already heard of some sort of power overloads from charging those. So NextEra is definitely going to be interesting as long as it stays as one of the main companies in this space, which it's giving every indication of being one. I mean, literally with its affiliates. God, I hate Windows. What the hell was that? It's giving every indication of being one of the largest companies, given it's the largest renewable energy provider. So there are other ones to look at, though. I mean, at least to just glance at, Southern Company and Dominion are these utilities. And you can just look at the utility ETF itself. It's sort of shaping up, which is a nice sign. But this is the Southern Company. It doesn't look great, right? And then Dominion just moves so slowly that, yeah, it got a little breakout there. And maybe you got a great, whatever this is, 5%, depending if you really timed it right. But it's kind of just the market going up there. It's really not anything super specific to Dominion. So I do think this is one of the best ways to play energy right now. There are some other companies that sort of can shape up and might shape up, but some of them just look really messy. And I think the best way, again, is the stock that looks the best and also has the story, being the world's largest solar and battery storage provider. And this connection to data centers is no joke. So 4 gigawatts of power deals in the pipeline connected to data centers. So this is a big statement from the CEO too, asking NextEra if they could identify grid-connected sites capable of serving 5 gigawatts, which is the energy consumption of a mid-sized city. So these are massive, massive power requirements. And them being green is a nice little touch that I think anyone working on the policy side of this is going to help. They really got their fingers in everything. Here's this nuclear site that they're working in. So it's definitely a company at the nexus of everything everyone is talking about who's serious about basically the economy, which is entirely data centers right now. So that's enough on NextEra. One other company that's pretty interesting is Corning, ticker symbol GLW. This is what they do: materials science, glass science. Really, that means optics and fiber optics. So connections between data centers. You know, you send the bits over the cables. So that's what they do. They're a big company, 70 billion, and they're also in the data center conversation. 4 billion of sales, up 15% year over year. And this is the key. 1.5 billion is up 30% year over year. This is that optical communications. So a lot more than 15. And enterprise networks, 58% year over year. So enterprise compute, data storage is huge. All the data lakes, networking is the underbelly of all of that. Sure, they've got other segments. I think some of these are for like smartphone screens, solar as well. Solar panels would make sense, but the main important thing for this company has to be the data center build-outs, and the optical communications in this sector as a whole looks pretty interesting. So forecasts indicate that, I don't even know what this means. Earnings growth slightly outpaces sales growth. Someone can tell me at the comments, but I'm pretty sure that's not a red flag. I could be wrong. You want earnings and sales to be good, so the fact that they're a little different I don't think is a huge deal. Demand's gone up. So it is for smartphones. Also have significant demand for that. And this isn't like a 10-year idea or anything. Depending on what data centers actually get approved, permitted and all that is going to have a effect. And, you know, if they do have some competitor come in and eat their lunch in some of these other segments, maybe that'll be a problem, but they do appear to be right in the eye of the hurricane in a good way. And the stock chart says that. This is pretty crazy, doubling since the April lows. So it's holding up, sold off with the market, which is actually sort of a healthy digestion. This November 13th down day, if we look at the market, we can see that's pretty significant. We can go back to a chart where all the bars are connected. I like to look at that. I like to think of after hours as, you know, just like the regular market. You can still trade shares in a lot of these companies. Futures are moving, so you might as well look at the stock charts. So here's where it's setting up. This is why it's interesting. I'm not going to draw anything super, artful here, but you can basically see what this creates is an opportunity where you can buy here and you can risk 1, 2, 3, 4, 5, 6, 7, maybe 8 days. So that level is really important in that if it gets there, people decide, no, it's not worth that much. They sell it off. Oh, it's not worth that much. Sell it off. Oh, you know what it is. And now we're breaking out and now you can risk off that level. So your risk's 50 cents for a $10 move. It's pretty awesome. 20 to 1 risk reward. I'm not trying to make some sort of Bermuda Triangle thing here. I think that's pretty exciting. You can see it even held this on the 1010 Trump G rare earths day. So it's definitely important. They're definitely in the right sector to be interested in this. And the chart is kind of the cherry on top. These are some smaller companies, or at least not talked about much, big US companies. Fiber optics, and this is the type of products: high density fiber cables, connector assemblies. Glassworks AI is what they call it. as long as this keeps being true, this is a lot. 36 times more fiber connections per rack unit, which basically means faster. There we go. That's the word, bandwidth, flow of data. And they're connected with Lumen, which is a major name in AI-enabled data centers. Lumen is taking a little breather. Connection with Broadcom is also incredible. That's the company that's gone up like crazy recently. They had that OpenAI deal as well. So everything they've got going on is the real deal as far as it sounds right now. And if we look at these other companies, I mean, Broadcom, big move up right now. And then Lumen taking a breather, but just after earnings. So I think Corning looks like the best one that hasn't gone yet. So those are those two ideas. And I think NextEra is also interesting for sure. So if you like those two ideas, whoops, that's a better wind down sound. Hit that like button for the YouTube algorithm. If you want a free course on how to buy stocks before they go up, hit that subscribe. You'll see that in the YouTube post once a month. And if you want to give our 7-day trial a spin for that $19 Cyber Monday price, head over to stockscommunity.com and you could get results like the testimonials on that page. I can't guarantee it, but this isn't financial advice. It's just ideas. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.